It's Brian Preston, the money guy.
All right, this next one is from Melanie. And I think a lot of people are asking this question right now. My husband and I plan on upgrading to a larger home this year. We've got 3 kids now versus 1 infant when we moved in. So the family's gotten larger and they're thinking about changing homes. We will likely net additional money on the sale of our current home above the 20% down payment required. What should we do with this money? I'm 41 and my husband is 39. So a lot of folks now are selling houses for numbers they just didn't even think were possible. And for the next house they want to move to, they have enough equity that they cover well above the 20% on there. What should they do? How should they think about it? If you can't tell them what to do, like be prescriptive, what are some things that they should think about? Like how should they go about approaching that decision-making matrix?
This is so unique, Bo, because a lot of people will troll us and they'll say, man, I hear you guys, you say don't prepay your low interest debt until you're over 45. Well, under that logic, you probably should go ahead and load up and even take a home equity line to invest in the market versus a house. And I'm always like, no. Because here's the difference. Is that, first of all, you don't want to have all the transaction costs of real estate. Real estate is far from cheap to buy and sell and take debt out on. And then I don't like people taking home equity lines because usually there's a lot of variability to that interest rate. And just like rates are low now, there's nothing that says in a few years they're not significantly higher. That's right. And now you've blown up the whole risk profile as rates adjust. But for somebody like Melanie, this is unique because more than likely, when they upgrade into the new, bigger house, they put down 20%. They're going to lock in a fixed rate mortgage because historically we're in super low rates. What do you do with the extra money? Do you put it down towards the house or do you take it and invest it? We can't, and Bo alluded to this, we can't give you the specific answer because we don't know your situation, and that's more of what you would do for a client. I would encourage, Melanie, if you're at a point of success that you and your spouse need to take the relationship next level, consider reaching out to moneyguy.com or aboundwealth.com and taking the relationship to the next level. But I can tell you in general terms, if you're ahead of the curve, meaning you're great with saving, you're respecting the 25%, you're doing really good, you could look at this as an opportunity that maybe you have from a risk standpoint. You could invest this, but if you look at this and you're like, man, that extra money is going to let me catch some things up because I maybe have some debt, student loans, some credit card debt. I don't know your situation. If you're behind, this could be a situation to go look at the financial order of operations, catch yourself up to see if there's a way to get back to level. This is an incredible opportunity for you and your spouse.
The only thing that I'd add to that, if you do fall on the camp of, you know what, we're young, we're 41, we're 39, let's get these dollars working for us. Whatever strategy you implement, I would go with a conservative one, right? And here's what I mean by that. Right now, market's kind of down a little bit this year so far. So someone might say, oh man, I sold my house. This is so great. I'm going to take all that equity. I'm just going to go throw it in my portfolio. And that may work out well for you. And the Vanguard studies would suggest that lump sum does indeed beat dollar cost averaging over the long term. However, what you don't want to do is go put the money in the market and then all of a sudden something happens we don't see, right? The market goes down 15%, 20% from this point, and you're stuck there saying, man, I can't believe I made such a boneheaded decision. Why did I invest those dollars? I should have paid down my mortgage more, got a lower payment, yada, yada, yada. Whatever you do, if you decide to put that money to work, I would really consider a dollar cost averaging strategy with those proceeds. So you sell the house, you get into the new house, make sure you've covered all the other expenses, the lawnmowers and the, whatever stuff, if you got to decorate new rooms or buy new furniture, make sure all of that's accounted for. But once you truly know your excess, put together a plan where maybe if it's a substantial sum of money over the next 6, 7, 8, 9, 10 months, you just steadily introduce it into your portfolio. And that will remove the sting of not knowing, oh, did I make the right decision or did I not make the right decision?